All right, good evening, everyone. It is 7 p.m. Eastern on Sunday, May 18th. I'm going to start right out with the elephant in the room. Kind of encouraged, really. So we'll start out with the Moodys downgrade. Listen, it's just more. And I know we talked about this a little bit last week, but a lot of it's just politically driven. Trying to kind of spread this sentiment that the economy and the markets are in trouble, which, and I know I kind of keep bringing this back up, but I started the Sunday night live streams for a very specific reason, because I got sick of all the bad information out there. And really, Liberation Day was the catalyst for the beginning of the Sunday night live stream, because I saw so much panic around Liberation Day and tariffs and just terrible information, just absolutely terrible information that that tariffs were going to ruin the economy, ruin the markets. And you can go back to the very first Sunday Night Live, and I'm like, guys, this is good. Tariffs are a good thing. We go back to the Gilded Age, the golden age of the late 1800s, early 1900s, when tariffs were higher than any other time in American history, and the economy was booming. Then the Federal Reserve came along, started to get involved. Income taxes came along, and then guess what? About 10, 15 years later, we had the Great Depression. Tariffs should have never went away. We shouldn't have went to income taxes. The Federal Reserve should have never been founded. But we've talked about that a lot. And the point I'm making is all of this bad information, all it did was force people to panic sell, terrible decision making. I was saying buy the dip the entire month of April, and look at where we are, as of Friday, almost all the way back from the highs. So that's why I want to do these, is just give you the real information. And ultimately, you can do with it what you will. Okay. But I just look at the track record of going back to Liberation Day and all of that shakeout in April, and then would have been just absolute. The dumbest thing would have been to sell any long-term holdings. You should have been adding into all those pullbacks. But that being said, let's jump forward to today. And, S&P futures down 0.6%. And I would have thought, and again, this Moody's downgrade, it's just the latest fear tactic that they're trying to use to avoid rate cuts and try and paint this picture that the economy is in a bad place when the economy isn't the greatest place. I mean, we're going to have rough roads, et cetera. But with all of the money, look at all of the foreign investment coming in over the last week. Literally trillions of dollars from Middle East countries coming into America. You go back before that, Japan investing in America. It's just so this is just the latest tactic to try and induce fear and paint a picture that's literally the exact opposite of reality. Now, that being said, I thought we'd have much bigger than a 0.6% gap down in S&P futures. I just thought that would be I thought Friday night, I was like, man, probably 2 to 3%, gap down. And here we are, 0.6%. So I think that is proof that not only investors, but just everybody is just really started to see through this. They dropped that news on Friday night after the market closed. Now, keep in mind that timing is intentional as well. There's a reason that they release that type of news after the market close on a Friday, because they know, or they don't know, but what they're trying to do is induce as much panic over the weekend when people can't trade. And then they're just trying to create a big fear-based sell-off into Monday morning. That's the reason why. They could have released that news Friday morning. They could have released it Friday during the day. They could have waited till Monday to release it. Why do you release it at 5 o'clock on a Friday night? because you're playing a game and you're trying to induce panic. But the encouraging thing is, looks like the market's starting to see through it, really, with that 0.6% gap down. I consider that very encouraging. So let's jump over to the agenda, recapping the week. S&P 500 up 5.3% on the week. Now, these are based on the 4 p.m. close, okay? So all of these are based on the 4 p.m. close. So if you're checking these, this doesn't include after hours or tonight's futures. So S&P up 5.3% on the week. NASDAQ up 7.2% on the week, which we love. I mean, most of the stocks we day trade are very technology heavy, tech based. You know, we love to trade the quantums, the AIs, the chip makers, et cetera. So, you know, as always, the NASDAQ is one of the best to watch. Let me grab a drink. And then the Dow, 3.4% on the week. And then the Russell 2000, always, you know, the two that I really like to track are the NASDAQ and the Russell 2000. Russell 2000 is the, you know, the small caps. So they were up 4.5% on the week. Big drivers behind that were the 90-day tariff pause from China, which we knew they would capitulate. When you hold all the cards, everyone else has to capitulate. And I think the tariff picture with China is just going to continue to improve. Listen, they make a bunch of cheap crap. They got to sell their cheap crap somewhere. They got to capitulate on the tariffs or no one will buy their cheap crap. So positive inflation data. You know, now because of the positive inflation data, the Fed chose to stay pat, which was the wrong decision. But we talked about that already last week. And then you saw the University of Michigan Consumer Sentiment Index, which is, geez, you know, that is my, you know, I'm from Michigan, the university, that was probably the most ridiculous survey I've seen. But I mean, it's survey based. At the end of the day, the UMich Consumer Sentiment is a consumer survey. So you got to take it with a grain of salt. I mean, who answers these surveys? Like that's one thing that's always interesting to me during the political season. I'm like, who's lonely and bored enough? Like, who has aren't we all really busy? Don't we have a lot going on? Like, who's answering a political survey? You know, I'm like, I mean, just got to be the most absolute bored people with like nothing better to do. But it's reflected. You know, you've got non-producers, people that aren't out there working their butts off, people that aren't out there grinding. And that, you know, that could go from business owners, entrepreneurs, blue collar people, like, you know, only people with no time or with unlimited time on their hands are going to reply to that survey. And you see the results based. Okay. Again, it is what it is. So listen, the market momentum is undeniable. You know, and I already had this in my notes about the strength of the markets. And you just look at, again, and I know I already talked about this, the resiliency. You know, we get this credit downgrade and the markets are down 0.6%. Pretty dang impressive. But it's crucial to stay vigilant and always stay agile. You know, we talk about this almost every week when people are wondering how to hedge, you know, how to hedge with your long-term holdings and avoid all of these shakeouts. And yeah, actually, that's a good point, Martin. Martin says only the people getting paid to respond to those surveys. Gold star for Martin. Well said. He probably nailed it. Like, hey, here's your check, but make sure you reply the way we want. So well said, Martin. Martin's paying attention. Anyway, that being said, and I know I talk about this almost every week, but if you want to avoid getting shook out of your long-term holdings, just day trade, day and swing trade. Take advantage of all the volatility that we have. You know, there's you know, since the election, we've had some of the most extreme volatility, whether it be in small caps, mid caps, and even large caps. And there's day trade opportunities there. You know, take advantage of the fact that we have, 10 different patterns that we can day trade on small caps, mid caps, and a little bit on large caps, but that's the nice thing about the leveraged ETFs. If you do want to day trade, in the NVIDIAs, the Teslas, the super micros, the micro strategies, they all have leveraged ETFs that are attached to them. And so that gives you great exposure from a day trade perspective. And all of our patterns apply to those leveraged ETFs, whether it be morning faders, week open red to greens, dip and rips, afternoon VWAP holds, etc. So, just stay agile, have a plan, trade the patterns with, around the volatility. And then you don't have to sit there and stare at your long-term holdings every second, because you just let them do what they do, and over time, you get paid by that. So I did ask this last week. We did have, a pretty good quantum stock run this week. I think I've been very consistent over the last 6 weeks or so that I think the hot sector of the summer is going to be the quantum plays. Many of you guys got my quantum stock research report where I broke down, the whole quantum stock sector, as well as gave my main picks. But let me know, I like to keep these interactive. What do you guys think the hot sectors are going to be for the summer, or do you agree that quantum? Okay. Well, I mean, if you agree, you don't need to comment, but I'm always looking for ideas too. There's always possible I missed something. So let me know what you think the hot sector of the summer is going to be if you differ from the quantum stocks. Gonna roll over into the financial calendar. So stuff to watch, we've got a bunch of Fed speakers this week. Nobody really that really jumps out at me, but we do have Fed speakers tomorrow, Tuesday, Wednesday, Thursday, and Friday. Big economic calendar stuff to watch are on Monday. We've got the leading index mark to market for April. Earnings, we got CBAT earnings. I'm just looking for other 8 EGHT. And then that's about it for tomorrow. Nothing really jumping out at me. Tuesday, we've got ICSE weekly retail sales data. And then earnings start to heat up a little bit more on Tuesday. Some names that jump out at me: CAN, DOU, Pony. Pony's been on a hell of a tear over the last month. FYI, Pony has earnings after the close on Tuesday, or before the open. Pony has earnings Tuesday morning. So if you've been riding that wave, Pony has been crazy hot for the last 6 weeks. Definitely be aware, earnings drop Tuesday. Now remember, with earnings, when it comes to trading into earnings, like particularly on something like Pony, actually, let me bring up the chart and just go over that on the last month. It's been on a hell of a tear going for, actually, let me share my screen. So from basically the bottom back on April 23rd at $4, Pony's gone from 4 to 21 plus and now back into the 17s over the last month. Been on a hell of a tear. So the way we approach earnings, so if you're swinging Pony, the decision you need to make in earnings is, and this is what I do, and this is what I teach. So if you have a big buffer on a stock like Pony, then you can kind of throw the dice into earnings. Now, what I recommend doing is trimming some, okay? Sell some before earnings. You got all day tomorrow. Earnings are Tuesday morning. Always smart to lock some in. Now, that could be a third, that could be half, whatever you decide is right for you. Always good to pay yourself into a binary event like earnings. When I say binary event, something's going to happen with Pony, okay? Now that, and that might be, you might be like, duh, Tim, okay? But when we talk about binary events, Pony is either going to rip post earnings or it's going to absolutely crap the bed. Okay. But you're going to have volatility. Now, I don't know which. Okay. We have to wait and see what the reaction is to earnings, but it is going to be explosive one way or the other. So the smart way is either trim some or all into that binary event. Now, if you want to roll the dice because you think that that binary event is going to be explosive move to the upside, well, that's fine, but pay yourself. Now, the other approach is if you're basically flat or red, if you're flat or red on Pony going into Tuesday morning's earnings, smartest thing to do is just cut it. It's not worth the risk. It's not worth the risk that that binary event is going to be a massive gap down. Does that make sense? So if you have a big buffer, if you're, if you've been swinging this and you're in at the, and you're up, 30, 40, 50, 100% on Pony, then it's one thing. You trim some, you let it ride into that binary event. Now, if you're flat or you're down, the smartest thing to do is just cut your losses tomorrow and don't run the risk that that binary event is just going to massively increase your losses. Now, I know what most traders do. They hold those losers. They don't want to admit that they're wrong. They want to clutch onto it. Please, 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 please let it be a positive reaction to earnings. What is that? That is just hope. That's all it is. You're just hoping you get lucky. Now, I know what most new traders struggle with. Let's say Pony gaps up and they're like, oh, I should have held. Well, it could have gapped down hard too. You always have to control your risk. Your number one job as a trader is controlling your risk. And holding a loser or holding a break-even trade into earnings, you might as well just go to the casino. Cut it. Move on, and you can always rebuy. Like, that's the other thing that so many people mess up. Listen, if Pony rips post-earnings, you can just rebuy. It's not like you can't get back into a stock. Sometimes people just get addicted to these stocks, and they just the whole point of being a trader is being agile and reacting instead of playing the hope and pray type game. So anyway, that's how we approach all stocks on earnings. I'm just using Pony as an example because it is coming up Tuesday morning. Wednesday, we've got mortgage application data, Department of Energy inventory, and then a bunch of Treasury news. Then earnings on Wednesday, names that jump out at me: Baidu, Bison, Goose, Goos is very frequently active into earnings. Even I don't know why, but it's always an earnings play. IQ, and then after the close, Snow coming up this week. And then just running through the calendar, nothing much that interesting. Thursday morning, we got jobless claims. That's the biggest data point. And then Thursday night, NNOX has earnings Thursday night. W Day as well. And then Friday, Baker Hughes rig data. We don't really trade oil that much. So those are kind of the main data points for the week. And let me jump over to the other notes I have here. Going over what we've got. Whoops. Yeah. Okay. I think whoops. I missed one. Let me get this other. I got my other notes doc I accidentally closed here. Right there. There we go. I closed my notes. So S&P 500 pulled off a rare feat of 5 straight green days to close out a perfect week this week. That action does not happen in bear markets. Okay, this clean, steady strength from start to finish until the Moodys downgrade. The S&P closed out a 5-day win streak with its second best week of the year and 20% bounce off of the April 7th lows. So just 5 days after Liberation Day, a 20% bounce from there. V-shaped recovery, Russell 1000 snapped back. VIX is absolutely collapsing. VIX is at one of its lowest rates ever, or not ever, but in recent history. Run through my other Coinbase, stocks to watch, UNH, short UNH, it's going to 0. And okay, yeah, I think that caught up on all of the data of the week. So markets rally has really been fueled by positive developments, U.S.-China tariff pause, encouraging economic data, even with the overweight of the Moody's downgrade, but we already talked about that. As always, in times of heightened volatility, this is when the real money's made. Okay, we love volatile times, but you have to have discipline. You have to have a trade plan. You always know what you're going to do before you enter the stock. Okay, yeah, Christopher Gilbert. It's one of my favorite trading quotes. I stole that quote. Okay, this is not my quote. I'm sure you could Google it. I did steal this quote, but it's one of my favorite quotes when it comes to whether it be binary events, earnings, catalysts, etc. And guys, this is so true. When it, like, going back, and thank you, Christopher, going back to when we were talking about holding into earnings. As always, I would, and a lot of times when people see this quote for the first time, they're like, I don't really get it. But I'm telling you, the more you trade penny stocks, okay, the more you trade penny stocks, the more you will know how powerful this quote is. And it's I'd rather be wishing I was in versus wishing I was out. And think about that quote. It's one of my favorite trading quotes. I use it all the time. I stole it. This isn't my quote, but it's so true. Like, I would rather sell into earnings, and cut it and be watching it go higher, wishing I was in, than catch a massive gap down and be like, oh my God, why did I stay in? And I'm telling you, especially when it comes to penny stocks, it's so true. So true. So let's jump over. Hit me with questions, guys. Drop questions. Any Q&A you want. And so what do you guys think? Can I do polls on here? Oh, well, I'll just ask. What do you guys think? Do you think the market rally is sustainable, or do you believe the fear, uncertainty, and doubt? I'll just do a poll as the yes and no. Okay. Do you guys think this is a fake rally? I mean, 5 straight green days last week, 20% bounce post-Liberation Day. Do you think this is sustainable, or do you think it's all over? So I like to keep them interactive, So, okay, let's jump over to the weekly watch list. I just kind of want to run through these, guys. SYTA. Oh, actually, I got something to show you guys. Morning faders. I know we talk about them almost every week, but morning faders, RCTs are the two absolutely hottest patterns right now. And basically, the two best trades, in my opinion, we don't have to agree, but the two best plays of Friday, one was an RCT and the other was a morning fader. So I just want to go over those before I get to the watch list. So space, let's talk about the morning fader. What I believe, so the two best plays, I believe, on Friday were space and AFMD. Okay, so let me recap the morning fader on space, and then we'll go over the RCT on AFMD. So if you look at space, this is exactly what we look for every day, every single day. You get that big gap up on Thursday night, and let me draw a trend line here. Whoops. Let me delete that. Stop that. So there's your trend, okay? Big gap up Thursday night, and then all the way into the market open, Space faded, 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 faded. Just constantly lower, 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 lower. Then the opening candle low was put in right there. So you basically had the opening candle low in the 370s. So the way we trade morning faders, remember this counts for after hours gappers or pre-market gappers. That big spike and then just that slow trickle lower. Does everybody see that on space? Does everybody see the, actually, let me get rid of my Oracle lines. Let me clean this up. There. So does everybody see that fade on space? Big gap up, and then look at the trend line. Just lower, 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 lower. Then the best way to trade these morning faders is just to wait for the Oracle algorithm entry, which let me look it up on space. What was it? I don't want to misquote. Let me get the exact entry from Friday. I don't want to misquote. There it is. Let me download that. And downloads. 408. Okay. So 408 was the entry from the algorithm at the market open. The opening candle low was 370. So that entry did not hit until about 9:40-ish. So about 7 minutes after the signal was delivered. And the way we trade these is you use that opening candle low as your stop. So your entry is determined by the algorithm. Your stop is the opening candle low in 370. So in this instance, you'd be risking 30-ish cents a share. And the stock went up, $2.50. So you can see how there's such great risk to reward on morning faders. Think about it. Let's say space didn't work. Let's say it didn't work. You lose 30 cents a share. Big deal. Okay. $4 stock, 30 cents a share. Losing's part of trading. But in this instance, look at the reward versus the risk. Now, I'm not saying you would have held all the way till 640 or 660. Probably the best sell, the smartest sell would have been kind of when it struggled with this resistance level in the 550. Okay. Now, guys, all these lines on my chart are laid out by the Oracle algorithm. These are not my lines. If you ever see lines on my chart, I use purple because Oracle doesn't use purple. So I would say the best sell would probably been right here when it kind of struggled with 550, in here about noonish. So let's say that scenario. Let's say you bought at 408, risking 370, and you sold in the 550s. You're talking almost $1.50 of upside for 30 cents of downside. That's 5-to-1 risk to reward. Okay. Not bad. Yeah. SYTA was killer as well. We had a lot of great plays, but I just want to highlight the morning fader. And then I also want to touch on the RCT on AFMD. So the two hottest patterns right now, RCTs and morning faders. And then if I go to pre-market, so this was right here. So right here's at 8:55 a.m. You can see, this is a screenshot from 8:55 a.m. And I said, RCT is in. Now we look for that straight vertical move, and then we wait. We don't chase the initial move. We wait for that first red candle, and then we use the top and the bottom of that candle for our entry and our stop loss. So you can see here, 25 cents by 21, 4 cents of risk on AFMD. And notice at the time of the screenshot, stock was below it hadn't hit the entry of the top of the candle yet. And I was live. I was doing a live trading webinar. And a few people asked, they said, hey, Tim, is the RCT still valid on AFMD? And I'm like, yeah, it is. It has not broken the top of the first red candle yet. And if it never does, you just let it fade lower. You just leave it be. Forget it. Who cares? If AFMD went all the way back, you don't trade it. You don't play guessing games if you're using any of these patterns. Now, let's fast forward about an hour, 45 minutes. You fast forward to 9:40 a.m. and notice that's when AFMD broke 25 cents, the top of that bottom channel, and proceeded to go from 25 cents to 50 cents. And that move we laid out together both on pre-market prep and the 9 a.m. webinar. And all you had to do was wait. All you had to do was wait. Now you had to wait 45 minutes. I know people hate waiting, but it's all you had to do. And same with space. All you had to do was space. Now you had to wait a lot longer. Now I know a lot of people that bought space Thursday night and got stopped out. All you had to do with space was wait for it to set up. Now those are just two of the patterns we use every day. All of those patterns are in the Oracle algorithm. They're built in. And I'm going to end with this. I didn't get my agenda done yet again. I've got a webinar tonight at 8 p.m., so I do need to run. But speaking of all of these patterns that we trade, all of them are in the Oracle algorithm. And so far this year, we have 34 stocks that have gone up more than 100% from the Oracle entry. Now, is every Oracle stock a winner? No. Okay. Has a ridiculous win rate. But what's great about coupling the algorithm with these patterns is it allows you to build a watch list. Okay. And this is just this year. Okay. And this FYI, this list, there are stocks that went up 90%, 99% that didn't make this list. Okay. Like if a stock went up 70, 80, 90% from the entry, I don't put it on this list. This list is only stocks that double from the Oracle entry. And it's using morning faders and RCTs and dip and rips and week open red to greens, gold pivots, all of the patterns that I teach and use every day. And they're all built into the Oracle algorithm, and they're all used by having a trade plan, sticking to it, cutting your losses quickly, and just wash, rinse, and repeat every day. And there's hundreds of 20 percenters and 30 percenters and 40 percenters that don't make this list. All right, guys, I'm short on time. I got to get ready for that 8 p.m. webinar, and I got to, do a couple things first. So as always, I only got to about 30% of my agenda, but I appreciate you guys joining me. Someday, maybe next Sunday will be the day I get to my full agenda. I got a lot more for you, but ran out of time. So have a great night, everyone. Again, I was going to go over the watch list, but I ran out of time. But you can go to StocksToTrade.com/watchlist. It's all free. Just go to StocksToTrade.com/watchlist. Free every Sunday. I was going to recap it, but I ran out of time. All right. Have a great night, everyone. And we will see all of you in the Daily Income Trader system. We'll see you bright and early. I'll be up at 4 a.m. just like 7 days a week, baby. 7 days a week, 4 a.m. without an alarm clock. But nobody takes this shit more seriously than me. Most don't. Most sleep in. Most show up some days. I show up every day. Have a great night, everyone.